Very well. Welcome, everyone. Welcome to a new session here at FX Street. This is the FX Street Tokyo Open Live Room. Welcome, and I want to say hello to we have a lot of participants tonight. Welcome, Pantelis, Simone, FX Street admin, ISI Ali, Leib Lopez. OWSI, Joe, Jonathan, hello Mauricio, Adinda, Ryan Gandalf, we have Roland, Beckton, Flash Trader, Famom, Label Lopez. There are a lot of other of you who do not show up on the chat for some reason. We have Simone, Greg, Pantelis, Peter, FX Ambassador, Scott, welcome, good evening, thanks a lot for joining in. Let's very quickly introduce this new session. This is the FX Street Tokyo Open Live Room tonight. This is a daily show starting at 8 p.m. EST every day, here only on FX Street from Sundays to Thursday. This is real trading at the heart of the Asian session with me. I'm FibStalker, and I'll be your host today. Thanks for joining in. A quick reminder of the disclaimer here: trading is risky. Trading Forex and its derivatives, futures, options, CFDs, and other instruments with retail off-exchange transaction involve substantial risk of loss, and it's not suitable to all investors. As you know, I consider trading the most important, risk management the most important job in trading. You may lose all of or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses, and past performance is not necessarily indicative of future results. Please also review the FX Street risk disclosure on the website. The information I'm going to give in this webinar, it's and commentary and trading ideas are only to be considered as for educational purposes and are not substitute for an extensive independent research which should be performed before making your investment decision. I, Giuseppe Basile, FibStalker Consulting Inc., FX Street, will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, thanks a lot. Thanks for joining in. I see here incredible numbers going around. I read Pantelis, if I close my position now, I have a 7.5 reward to risk, Greg. I'm not doing it though. And I suppose that would be for the use of Japanese yen. We will talk about that a little bit later on. Before I continue, let me say hello to everyone. Good evening. Thanks for joining in. I also want to thank Dale Pinkett particularly today. I know that Dale, I saw from the recording of the LAR today that Dale has mentioned me, and I thank you, Dale, for doing that. Also, Dale has reminded to everyone that he was indeed the person who actually found me, uncovered me among the tweets on the net, and that was 2 years and a half ago. And he was very very graceful and kind to invite me also to the very first interview he had in the LAR. I mean, he opened the LAR. I remember it was, I believe, June the 6th, 2013, if I remember well. So actually, it's more than 2 years and a half back, and I was commenting at the time, and 6 months before, on the moves on the euro dollar as well. And thanks a lot, Dale. If I'm here, it's especially because of the consistency and great work Dale has done, and the fact that he believed in my work and what I was doing. And actually, he graciously also actually assigned and proposed a name for the footprints, the blue lines that you see on the screen, and he came with a very gracious and nice name, calling them the footprints of algos, the footprints of the big elephants. And I want to take the opportunity again to thank you, Dale. Thanks a lot for your support in this period, and for introducing me to Maurizio and FX Street. Now, enough for words here. I mean, I would obviously love to continue, but we have to dive into the market. We are here for that. You're not here for hearing me speaking about my activity, but rather for diving and looking at the market here. So, as usual, you know what's the format here. I will review some of the markets. I actually follow a number of them. I don't trade everything. I just follow a number of markets. I have 8 major markets, and then every now and then I add additional market occasionally. For example, this week, and that's one of the benefits that I get. So that I personally get also from the room is that I can hear also your opinions. I can hear you bringing up some of the markets, and occasionally I adopt some of these markets, as I did for the pound versus Japanese yen here that you see on the daily. And for this market on the weekly today, I believe I also identified the level that is pushing this price lower. This market is not different in terms of setups from the US dollar versus Japanese yen. That actually has been mentioned in the LAR as well today. And I know that there are some different opinions in relation to where that market could go. And it's always interesting to look at the opinion and how they are derived, because nobody is right 100% of the time. So I'm always interested in especially people who are consistent, like Dale and like other traders. It's always interesting to hear other opinions. Of course, I mean, I'm disciplined and I'll stick to my method because it served me well and it keeps serving me well. Anyway, any view of the market has to be respected. Okay, and I deeply appreciate that. So there are a lot of interesting development in these markets, and first of all, let's start from the US dollar Japanese yen, as that has been mentioned. And as you know, I'm short this market. I added again in the morning. There was a measure move, a continuation on the 30 minutes. I know that some of the I know that for sure Pantelis has added to that. I don't know if any other students as well as participants have added to that, but this extension now it's gone. So there was no participation at that level. It means that the bears are here in control. So this would, in a way, confirm my view that we are probably going to go into 114, and I'll show in a minute also the link between the US dollar Japanese yen and actually the stock market cycle, and that's very, very interesting, and that's what really scares me about this move in US dollar Japanese yen. I mean, this move now, it has several tenths of reward to risk if it gets to 114, and it's a good play. The point is that there are some consequences, and this is very serious, and there are consequences when it comes to when it comes to the effect on the US dollar market as well, because we know that the US dollar versus Japanese yen tends to trade in lockstep, or at least it has in the last few years with the SP 500. Now, the SP 500 is very, very close to a potential end of cycle, and that end will be, unfortunately, sealed if the US dollar versus Japanese yen gets into 114. I think that might be sealed even before. So this is very important, and we have to study this market carefully going forward. Now, the interesting about the US dollar Japanese yen is that it's now going to be pushed into the 118.80 level. I have little doubts about that. There is nothing that is going to stop this market before this market can get into that level. And we will see what happens in that level. Now, if that level, that area starting from 118.82 will not show any kind of support, ladies and gentlemen, we can kiss goodbye this market, and there's very little doubt that this market is going to actually trade into the that 114.80. Okay, and you can see here clearly also the reaction at this level. The reaction at the 120.92, it's real. It's not, you can see it from that huge weekly, but they start forming. It's only the second day of the week. So the 114.80, 114.90, it could be the price where this market gets. And I believe as this market is trading in extension and was trading in extension, still trading in extension long in this market, despite what you can anticipate, what you had anticipated last week with the BOJ decision. Clearly, the algorithms are showing the way here. The way they're placed is very, very clear here. So, I wouldn't say that 114.80 it's impossible. And actually, of course, that's not something that we will see this week, unless we get, you know, a wash down as we saw with this bar here. But I think that this is gonna be, 2-3 weeks, even 1 month kind of work. So let's always put things in perspective. Okay, this is the weekly time frame, so it might take 2-3 weeks, even 1 month to get there, if we get there. Now, before we can think about that, I think it's important to understand that there are other levels that will come into play. Okay, and there is one level that is something that we will be confronted to it very, very soon here, potentially this week. That's 118.80. And if you have multiple positions, this might be a level where you want to get some profits out. Okay, so if that's the case, if you were actually trading this successfully, I think we should carry at least 2 positions at the moment, and you could remove one that at that 118.80. Will I do that? No, I will try to see whether I can bring this position to target. Hello Marco, hello Greg, hello Jax. FX Ambassador, hello. Scott, Pantelis. I see there are other participants joining in. Rusty, Fame Home, yes, Flash Trader, Beckton, Roland, thanks for joining in. So, I mean, I have the only thing that could really bring this price higher or above 121, 122 if it's that 118.80 trades and actually pushes price higher. Is that possible? Of course it is possible, and that would support that would support Dale's case as well. Will it happen? I don't know, and I really cannot tell it now, right? What I can tell you is that this market keeps moving lower. 118.80, it's almost given for granted there. I see that other attendees keeps coming in. Welcome Joe, welcome Karim. Thanks for joining in. We are reviewing the US dollar Japanese yen here, and as we said, we are going to see 118.80. Now, there is a market which is in a very similar situation as you would probably now guess, and that's the pound versus the Japanese yen. Look at this beauty. This market keeps pushing lower, and it's forming the 830 bar. Now, what we want to see here, it's a break of that 72.13, and we are actually going to very probably get that break in the next during the show here. Gonna get that in a few minutes, I believe. So what's the meaning of that? And as you can see, it's accelerating. So it's very very probable we're gonna get that. Now, what's the meaning of that? Let's put this in perspective. This is very important too. And of course, the US dollar Japanese yen keeps pushing as well, which is nice, considering that we are in short. Now, if we put things in perspective, look at this beauty here. This is even more interesting than the US dollar to Japanese yen, which means that the pound is much weaker compared to the US dollar, compared to and relative to the Japanese yen. And this is not something new. If you look at the pound versus all the other currency, the view is very, very dire. I mean, whether you see the pound versus US dollar, the pound versus the euro, the pound versus Japanese yen. So, we know the US dollar is not in good waters, but the pound, it's even in worse waters in a way, if we can use that expression. So, this is all relative. I see other participant joining in. Hello, Pedro. Thanks for joining in. So going back to this market now, today I was capable of identifying the level that algorithms are using here, and that level has very, very strong implications here, because that the level is pushing price into this 158, and very, very probable that is going to push into this 156.60, 156.40 here. How long this is going to take? This may take a few weeks, so don't expect this to happen in 2 days. Rusty one is saying, I think that before they allow us to take USD Japanese yen to below 116, BOJ will intervene to take our shorts. Beware. Happened to me in 2010. Thanks a lot for the comment, Rusty, because whenever there is a comment that is sensitive and sensible to risk management, it is always very, very welcome. It actually is even more welcome than other comments. Of course, all the comments are welcome. One of the reason that one of the things I want to bring up, hello Travis, is that that's the reason why I always, and that's what I teach as well, I always trade with the concept of free risk trades. Of course, a free risk trades will only limit the loss if we have a very fast market moving. However, I also know by experience that algorithms tend to set up in the direction of the known and larger trend. So we're talking about the smart money here. We're talking about algorithms that are run by banks, large institutions. If you believe that information is symmetrical in the market, I think that could be, there may not be they might be far from the truth. I strongly believe that this environment is strongly information asymmetrical in a way. So there are the people in the know, they might have better information, not necessarily all the information, but better information. So that said, Rusty, thanks a lot for that comments. I would say that anything can happen in the market, so that's definitely an outcome that that could happen. At the moment, I will keep following the setups with various trades, and we will see what the market will bring to us. Thanks for that comment there. Okay, but what I see at the moment in this market is basically this market setting up at 175.03 and potentially pushing into 156. So it's 1900 pips. We don't get this kind of moves frequently, but at this moment, and maybe because also because we are very close to that cycle in the US dollar, in the SP 500, this market is trading lower. Now, mind also that this market has been in short trading since the end of 2014 here. So it's there's a lot of participation on the downside. Hi Travis, thanks for joining in. Just opened a sell pound versus Japanese yen when price broke that 23.6% level. I'm not sure exactly which level you are looking at. Selling at this price, it's a little bit late. In fact, I want to, there's a 61.8% level that failed. As I mentioned before, that level would fail during this session, and that's exactly what happened there. I mentioned there. Sorry, let me show that here on the watched opportunities. There was this level just broken. Now, keep always in mind this that I'm just about to tell you. When you see a move and you are not in it, the move is ended. Okay, always remind this. If you remind this simple piece of advice, you will not find yourself out of a good trade or with enough space to move. Okay, so this is not the place where to take a position short. Okay, at least that's my Travis. I'm not saying that you did something wrong. I'm saying that I would not take a position short here, because we broke the sequence here, and now this market has the potential to retrace a lot. And that's why I always leave the market do whatever it has to do, and I'm not going to touch the market. And we have here a potential for two type of retrace. One retrace is a monster retrace that could bring price into that 173.53. Another retrace could be a 4-hour retrace or a daily retrace. We don't know that yet. The market will tell us. Okay, so there are a number of levels that you will need to keep in mind. The closest is probably the 172.50. If the market gets there and my FibStalking timing proprietary technique gives me a signal, I'll enter short there. I never trade those levels blindly, and you should not do that as well. Okay, so Travis, be careful here. It's easy to get excited and involved when the market is moving, but I want to remind again this piece of advice: if you see a move and you are not in it, the move has just ended very often. Okay, and there is a reason why that happens, because we are wired to buy. Not at the best moment. We are wired to buy at the worst moment possible, because we tend to apply some concept of physics and daily behavior to markets, and we know that markets do not respond to physical laws, so they respond to emotions, and there are three main emotions that are always in play in the market. Three main emotion. Of course, there is the greed, And the greed enters into the picture when we are in a good position and we are making money and we want to make more. While we have to respect the fact that the market has a structure and will not be capable of giving us more than what we should be taking. Okay. Now, again, I'm not necessarily representing that you did a wrong thing here, Travis, because this market could continue to go lower for a while. The point is that eventually this market will need to retrace. That's the nature of the market. You know, it's like a dog barking. A dog barks because it's in the nature of the dog to bark, and the market retraces in waves because in the nature of the market to do that. And actually, Pantelis is mentioning the bandwagon here. Thanks, Pantelis, for bringing that up, because I want to give also briefly a resource here that you will that you might find interesting. And to do that, I need to point you to my page, and bear with me here, because there is Pantelis that has mentioned a very important theory, and actually I have illustrated this theory with the charts. So if you have not done that yet, bear with me and stay with me here, because I'd like to invite you to review and watch and study as well, if you're really serious and you're interested in and willing to understand this concept deeply, which is very, very important. I would suggest you to actually go to my page, which I'm going to show you in a minute here, and look at the one of the early presentation that and webinar that I published. This was last year, and you should be able to see the page now. Let me scroll it, and if you go back and press the view all button here, and you go back to 2014, you will find a very, very important webinar that I want all of you to watch. It's a free webinar. You don't have to have the premium account, although that is highly recommended. You get one. There are hundreds of very, very good, extremely good presentation from other contributors here in FX Street. And if you go, there is May 19, if you want to understand a little bit some of the rules I use to trace these levels. But there is July the 2nd, 2014 is the bandwagon theory illustrated. So if you understand and study the bandwagon theory here, you will never have problems, and you will never find yourself trading against the market. So I cannot recommend strongly enough for you to actually review this, because I believe this is something that you actually want to review. Is very, very important. So I gave you the link there. It's on my page. If you are serious and interested, have a look at that. Spend that hour reviewing that, and you will not regret. So wait for a bounce higher, yes, and you will see that this bounce will eventually come, and it might come very, very quickly here. So you have to be very, very careful when taking this kind of trade. Where this market can go, potentially could go back to 173.54, and that's, by the way, it's the way head and shoulders are formed. Head and shoulders can be fully explained with the effect of algorithms on price. So to be very, very careful there. So Travis, by no means, yes, we want to trade in the direction of the trend, and so if the trend is down, we want to trade a reaction higher. We don't want to trade when the market is already moving lower. Of course, this market could just drop and put you into the green, into the black. The point is, we're not gambling here. We're trying to, we are managing risk seriously. This is a business. We manage risk seriously, and I believe I have plenty of testimonies. I mean, in the room here as well as in the private room. So let's go back to the markets and let's stop babbling here. Let's look at the charts and what's going on here. Um, I mean, all these, of course, all this discussion is very, very important. It's not babbling indeed, but it is something that can help you. So we reviewed US dollar, Japanese yen, as well as the New Zealand dollar. You might ask, what happened to your Euro Australian dollar? Well, I was forced at some point to exit that trade. I mean, I still exited with 4.5 reward to risk. That was not my intention. I lost the opportunity yesterday evening because I was not watching the market during the Australian news yesterday, and we have to be disciplined as well, because we cannot watch the market 24/7, and sometimes I impose myself not to. But I also had already Australian dollar, US dollar lower, as well as US dollar Japanese yen, two positions, and sorry, one position yesterday, two position today, and one position short on the pound versus Japanese yen. So is that a big deal? No. I mean, of course, I left 50% of the potential or more of the potential of this trade, but there would be other opportunities, and I'm not worried about that. That skewed a little bit my performance for the month of February. Am I worried? I'm not, and it's unfortunate I didn't get into that level. So we will need to reassess this market, and potentially now we will need to see what is trading here, and whether sorry, this is the euro card. Of course, the euro card has similar shape as the euro Australian dollar here. We will need to. I will reassess this market at the end of the week or during the week, and in order to understand what's going on there. I will need a little bit of time to do that analysis, of course. Okay, am I worried? No. Is it possible that this is the start of the move of the US dollar, Canadian dollar as well? I mean, everything is possible, but before we can say that, we need to find the actual level that is playing here, and also we will need to see some conviction in this market. So I think the cycle has not ended there, and if it has ended, that's unfortunate, because it would be more difficult to pick up this price and set up a target for the US or Canadian dollar. Am I worried? No. We are carrying position short in other markets as well. So that's not something that worries me. 9 reward to risk, that's related to the Australian dollar. Is that the Euro Australian dollar, Pantelis there? So Travis, yeah, I opened trade 173.60. Travis, and got out 173.31, and got out and missed a bit of the move, and so reopened a sell at 172.28. Okay, so you were already involved in this market. Okay, that's something different then. So I just thought that you just entered it now. So what you mentioned there is, you said you entered 73.60, which is not too bad. It's a very good entry actually. And then you said and got out the 73.31. That's unfortunate, because you could have kept this move for this 172.60 actually. So for 100 pips, because we knew that level was to be tested. Okay, so again, what's the next level for this market? Believe it or not, there is nothing at all. Before we get into the 169.50 now. Okay, of course, it's not gonna get there in one day. Unless we get a whooshy move here, it's not gonna be like that though. It's likely going to trade in extension, and I will identify that level, and we will see where the retrace. Can you see here how the head and shoulder form? either short-term form because the market go back to levels that are watched by algorithms, at least in modern markets, in these high volume modern markets here, and that's the way, one of the way they form. So no US dollar Japanese yen, actually it's 8.5 reward to risk. I think it's more than that. Pantelis, I have two trades and they add up to 26 reward to risk, both of them. So, and they are risk free. So I think you have to make your calculations again. So this market keep pushing lower here, and of course the Australian dollar and all the European um, keep pushing higher. Someone has asked, what about the euro dollar? You know what I think about the euro dollar? It's a total mess. See, compare the euro dollar with, I'm going to put them on the same chart, okay? So, you can actually appreciate, the kind of directionality we have in one market, up and down, compared to the other. I think that when we put those two, one close to the other, you would really immediately recognize what's the market that offers the best opportunity, right? So I think there is no doubt about that. Now, the fact that the euro dollar, it's a highly watched and high volume market, doesn't mean that we have to trade it all the time. And indeed, I don't, when there are no clear position. And actually, yesterday I was commenting in the private room. I was commenting, compare. Let me get a larger time frame here. And I'm doing all the talking today. Of course, as I always say, if you have any questions, bring them up. And I'm very happy to discuss your view on the other markets as well. Now, it's not the weekly I want to look at. I want to look at the daily here. And when we look at the daily, yesterday I was commenting. And by the way, I have a newsletter as well. If you are interested, just go to FibStalker.com, and on the left side you can subscribe for the newsletter if you want, and I give some additional information, ebooks. I'm going to soon publish a free course on the FibStalker methods as well if you are interested. Now compare excuse me, compare the lateral move here we had from April to basically November last year, October, November last year, to the tiny move we are getting at the moment below resistance here, which is 110. Okay, and now when we saw this large move here, it was easy to get opportunities on the 4-hour time frame because it was wide, a big move forth and back. And for example, just to make a simple example here, even if we have to wait a couple of weeks, but we get a trade like this one, that's a sizable trade. That's tens of reward to risk if you time it on a smaller time frame. So obviously it's much more interesting when the market moves like this. The point is that compared to now and how tiny this measure move is, and yes, we have participation at 108 on the upside. That doesn't mean that this market will continue in the upside. We also have 110, which is a level that we could retest. Now, the fact that we retest that level doesn't necessarily mean that we have to trade this market. Indeed, I would actually I'm not even looking a lot at this market. I'm just doing the analysis weekly because I can see that, unless something fundamental changes there is not going to be any good opportunity in the market. So I think this chart proves that. Are there any markets you want me to review? Let's do a time check here. We still have 20 minutes, 15 minutes, and there's a comment there from Pantera. It's my third one. It's a little lower than yours. Got in at 120.56. Well, 120.56 still, pretty good actually. Still pretty good, and once we get into 118.82, that can be defended even if we get an extreme bounce from this level here. Now, considering how this market is retracing all that move higher, which was just hype and news, you know, I don't expect a lot of action at 118.82. I should say I do not anticipate a lot of action in that level, because you know very well that we cannot expect anything from the market. And if you believe that words are not important, words are very, very important. The way you speak to yourself, like using words like anticipate or expect, change totally your psychology when it comes to market. So that's something that I try to watch myself a lot. Excuse me. And in fact, I try to repeat this to myself and my students a lot, because it gets more and more, it gets almost an habit, right? And whenever you think about that, it comes to your mind immediately. Other statement that I love to mention is that we are paid for the quality of the decision that we do. We have to have the right tools to make the decisions, but then at some point, consistency is only supported by moving, you know, attention to other aspects of trading, beliefs, psychology, and so I believe the success in trading relies into aspects that are other than the mechanics of trading, which is price analysis and execution and entering in the right way. So Pedro is asking pound versus US dollar. So let's look at that. We reviewed that yesterday, and I believe that we are looking at a short in that market, and when we look at this market on the weekly time, it's very confusing. But when we look at the weekly time frame, I think the picture is very, very clear there. We have long-term short, medium-term short 158.77, and 139.50 is the target. Okay, which means that we need to try to get involved on the short side of things in this market. How do we do that? We need to identify the extension. Yesterday I identified the extensions for you. That extension found participation yesterday. As we can see, it's real. And if free market gets back into that 144.42, there is a potential for basically almost a 500 pips trade here. Okay. Strange price difference in Australian dollar, US dollar. My price are around 0.709, while yours are around 0.750. I mean, very, very possible, and it's a lot. 41 pips is quite a lot. I don't know if that's still related to news. It could also be that my price are not up to date. Sometimes there are some data errors, not that often, but you know, the most important thing here in the, let's see, so I have 70.11. It's only 10 pips, only 2 pips of difference at this stage, Peter. That's what I have at the moment in Australian dollar. So it would be very strange to see 41 pips of difference between two providers. I mean, this is 2 pips, which makes sense. I got into it and have 3 shorts with free trade. The 3 of them today. Great job, Pedro. We're gonna celebrate and have a beer. Although I don't drink beer, we will have a drink, a Coke, at the New York Traders Expo, where I hope to see you on the 22nd. So we'll have a lot to celebrate. This would be another thing that we'll add and celebrate. We will see if it develops. I mean, it's not impossible. Let's review it on the smaller time frame and see what that trade is bringing to us. So it's a pound versus US dollar. As you know, I don't trade this market, but it's good to have a look at Very good, very good. I'll be happy to meet you as well in New York. So let's look and see at this market here. You will notice that this market has a similar development as the pound versus US dollar, and for a reason, right? So see the extension that has failed, so there's no one who's interested in buying this market, and so there should be very good chances to bring this price to a lower level, and that lower level, all these market they move together. This market is a beauty here, and it's very possible to actually it would be possible to take a position now in a way. You take a position now here with a stop above ice. It's not kind of 144.04, 144.45. It's 40 pips of risk. You would risk, of course, a fixed amount. So I don't know. I mean, I think Peter is saying, Giuseppe, you seem to keep reading old chat posts, days old. Well, if I'm reading this, I think this is the new one. So less than a minute ago. So Peter, I'm not sure it's possible. Sometimes I read the previous ones. But as I was saying here, there is a 40 pip risk here, and this could be a good position to take now. And let me see how much would be the risk here, and actually, 40 pips. Of course, you risk a fixed amount of your you always risk a fixed amount of your account, so it doesn't matter how many pips they are. Your risk is always fixed. Okay. Do you agree with this concept that your risk has to be always fixed? Give me a yes or a no if you do not agree with this concept. If there is any one of you who's actually trading fixed sites, stop doing that. Stop doing that right now. Okay. I'm begging you to stop doing that and revert to proper risk management that actually risks a percentage of your account rather than actually risking a fixed lot. Fixed lot has no future. Let me be very very clear about that. Okay. So if you're not doing that, probably, and I don't want to seem harsh here, you're free to do whatever you want, of course. And I'm just saying that I believe that that's not representative of best practices. And you're free to, of course, to apply your own experience. But I believe that it is important to apply best practices. So let me check that then before we continue here. Can you write down and Fame Om seems to agree. Thanks for that comment. Very weird chat system. Most unfortunately, please look in this. Into this FX Suite. Okay, I think we have a feedback here. That's very good. Thanks, Peter. And Fame One is saying, I agree. And that was in relation to the comment on the managing risk. If there is one thing that you want to learn, for sure it's managing risk. And allow me, without being too pressy here, but I believe there is an opportunity there to look at some material. And again, this material, you don't have to, sometimes you don't have to, very often, the good material, you don't have to even pay for it. And You can go back to the list of webinars I have here, and I have a number of webinars that I have dedicated to risk management. In a way, in the last 2 years, I've been building a framework for your reference so that you can go and you can jump from the room into this material. Most of it is open. Advanced risk management for a sexy modern market. How to reach trading objectives with money management. And there's another one that I totally recommend you, how to challenge yourself for greater returns in modern market. This is going to be a very, very entertaining presentation here in this webinar. I have you playing the role of a money manager, a hedge fund manager, and you will have to take decision. And we simulate a trading system, and you will need to get decisions, and you have to beat yourself or your friends as well. So give me a yes, please, if you can, on the chat if you have reviewed any of this or in the past. I mean, it happened that you have watched or reviewed any of these webinars, please. I mean, I would really appreciate if you could do that. And thanks, Peter, for the information. Hello, Simone. And if you have reviewed some of my webinars, please give me a yes on the chat. If you have not done that, please give me a no. I just want to have, and there's no problem if you have not done that. I mean, be very open about that. I mean, it's if you could actually give me a little bit of feedback here, I would appreciate that. So David is saying yes. Joe is saying yes. Scott Lee. Hi, Travis. Welcome back. Hi, Simone. And so everybody has a limited amount of time they can dedicate to the trading activity. But if you have some time, try to schedule some time and review some of those webinars. So are you expecting a down move on the yen crosses? Yes, FX ambassador. Not only I'm expecting it, but I'm trading it as well. And actually I entered two positions, one in the morning around 120.80 here, and the other one yesterday around 120.14 here in anticipation of that move lower. For US dollar Japanese yen, I have a 114.80 target. I believe it's a matter of the first level is going to be 118.80 here, and the next one is likely to be 114.80, depending on which kind of behavior we get on this market. GY would be pound yen there. The pound yen, I mean, if you are short term, yes, you can get profits here, and there is some profit taking, and we explained the reason for that. But the market is likely to move in the coming days and weeks. Well, sorry, in the coming days here into 169.50. That's my that's the level I'm looking at. Okay, so it's 8:53. I will start a recap for this session right here. So during this session, what we did, we started by reviewing, I actually thanked Dale for his mention, and again, I want to thank Dale Pinkert for his support and for discovering me on the network and allowing me to share my view of the market. Thanks, Dale. That's highly appreciated. He graciously invited me to open the LAR, the very first interview. It was a great honor for me. Thanks, Dale, again for that. So let's move to the charts for this recap. And what we spoke about, of course, the pound versus the Japanese yen here, which is what you see on the screen here. We mentioned that this market has the potential to go into 118.82. I do not personally believe that that level will hold, and the reason for that is that that market would be a long trading against weekly and daily shorts here, which actually are participating in this market into starting from the 120, 121 area. Okay, so I don't believe that that kind of participation is going to be held. The fact that I don't believe it, it doesn't mean that it might not happen. But I don't believe that 118.80 level is going to hold price. Similar situation we saw for the pound versus Japanese yen. For this market, we have also identified on the weekly time frame the setup. This setup is pushing this price into 158 and eventually 156.60. That's my target for this market. Okay. Now, if this market retraces into this 175, that could still be an opportunity there. This market has to move lower, and there is a lot of room for this market to move lower. Okay, then what we did is that we spoke a little bit about the euro. We explained why the current move cannot be trusted. We also compared this move with the larger lateral move we got from April to November last year, and that larger move allowed for some opportunities. For example, there were longs like this, which actually brought price into the second target as well. So although the opportunity were rare, those opportunities were very, very good for multiple reward to risk multiples. While at the moment there is no reason to trade this market. This market is actually started having support at 108 and resistance at 110. So sorry, it's moving actually in that little corridor there. Until that is resolved, I'm not going to be interested in this market. And we won't have time to review the Kiwi FX Ambassador, but if you're here tomorrow, I promise that'll be the first market I'm going to look at. Okay, and I'm very consistent with these promises. Indeed, the pound versus Japanese yen was described for the very same reason, and I have traded it. So we spoke then about the Australian dollar, US dollar here a little bit, and also my trades that I exited with 4.5 reward to risk here. I hoped I could time it yesterday, but we mentioned the fact that we don't want to look at the market all the time. At least that's some discipline I want to keep because for a number of reasons, because we have other things to do, because we want to come back fresh, because we have to have a fresh view of the markets, and for a number of reasons. And so this is it for today. I hope you appreciate the Tokyo session. I love the words, FX Ambassador's words there. I love the Tokyo session. Well done. Thanks a lot, FX. I think we all do this together. It's not only me analyzing the market. I mean, if you come with your ideas and stick to it and bring your setups as well, we'll review them, and I'll always give my take. I'll never shy away from giving my view on these markets. Of course, there are some markets more technical than others, and I think that as you see this analysis being repeated, you will start also seeing what are the markets where this type of analysis can work better. So thanks a lot for joining in. I really appreciate you taking the time to be here today. I'll be very consistent. I'll be here every day from Sunday to Thursday, because I trade as well, by the way, and this helps me also preparing the 2 a.m. session. I actually trade 3 times a week. The first 3 days of the week, I'm based in Toronto. I systematically wake up before 2 a.m. and trade 1 hour and a half of the European session. If you're serious about trading and you're in North America, that's what you have to do. So if you're serious about trading Forex as well. And so thanks a lot. Thanks for joining in. Again, thanks, Dale. And I want to remind you all that there is going to be the LAR tomorrow with Dale Pinkett, which is a natural prosecution of the work that we do here, or I should say the opposite. The Tokyo Forex session is the natural consequence and prosecution of the very good job that is made daily by Dale Pinkett on LA. So I'll see you tomorrow at 8 p.m. EST sharp. I'll be here looking at the market and answering your questions. Thanks for joining. Bye-bye now.